Here's a paradox that sits right at the heart of one of the most debated assets in all of crypto. Over the past year, the company behind XRP has arguably had the most successful stretch in its entire history. A landmark legal victory, exchange-traded funds going live, and major banks running real transactions on their network. And yet, as we sit here in the middle of 2026, the price of XRP is trading well below where it was a year ago, hovering around $1. So the real question is not just what happened, it is this. If you are thinking long-term, is there a genuine case that XRP succeeds from here? Today, we are going to walk through that case piece by piece and be honest about the risks. First, let us make sure we all understand what XRP actually is, because this is where the entire long-term thesis begins. XRP is the native digital asset of the XRP Ledger, an open, decentralized blockchain that was built for one core purpose: moving money across borders quickly and cheaply. Transactions settle in roughly 3 to 5 seconds for a tiny fraction of a cent. Compare that to the traditional system, where sending money internationally can take days and pass through a chain of middlemen. The idea is that XRP can act as a neutral bridge between two currencies, so a bank does not need to keep piles of cash pre-positioned around the world. That utility, the actual job the asset is meant to do, is the foundation on which everything else rests. Now, let us build the bull case, and the first pillar is regulatory clarity. For years, XRP was haunted by a lawsuit from the United States Securities and Exchange Commission over whether it was an unregistered security. That cloud has now lifted. The case wound down with courts affirming that XRP traded on public secondary markets is not in itself a securities transaction. Supporters argue this hands XRP something most digital assets still do not have: a level of legal clarity in the United States. And it does not stop there. In July of 2026, Ripple secured full regulatory authorization in Luxembourg, giving it a licensed route to operate across roughly 30 European countries. On top of that, a bill known as the Clarity Act is working its way through Congress, and if it passes, it could formally classify XRP as a commodity under United States law. To be clear, that vote has not happened yet, and it is expected in the coming weeks, so it remains a catalyst to watch, not a done deal. The second pillar is the real-world use case, and this is the part that separates XRP from a lot of purely speculative tokens. Ripple has spent years building a payments network used by financial institutions around the world. In Japan, the financial giant SBI has expanded Ripple-powered remittance services that operate quietly behind ordinary banking apps, where most users have no idea a blockchain is involved at all. The prize supporters point to is enormous. The global cross-border payments market moves something on the order of $150 trillion every year. Ripple does not need to capture all of it. Even a modest slice, routed through a system that actually uses XRP for liquidity, would represent meaningful, recurring demand for the asset. That is the dream, and we will talk in a moment about the catch. The third pillar is institutional adoption, and this is where 2026 has been genuinely remarkable. Spot XRP exchange-traded funds went live in late 2025, and they have pulled in well over $1 billion in cumulative inflows across several major providers. Because these funds hold real XRP, the buying connects directly to the token. Beyond the funds, Ripple acquired a prime brokerage firm and launched Ripple Prime, pushing deeper into the plumbing of institutional finance. And in one of the most striking milestones, Ripple, JPMorgan, Mastercard, and Ondo Finance completed a cross-border tokenized United States Treasury settlement on the XRP Ledger, clearing in under 5 seconds. That is traditional Wall Street assets moving on a public blockchain rail, which is exactly the kind of bridge between old finance and new that the long-term thesis depends on. The fourth pillar is the growing ecosystem around the ledger itself. Ripple launched a dollar-backed stablecoin called RLUSD, which has climbed past $1 billion in circulation and complements XRP within the payment system. The tokenization of real-world assets on the XRP Ledger has grown to around $3.5 billion. Developers are adding a native lending protocol and upgraded trading pools. Ripple has even outlined a multi-year plan to make the ledger resistant to future quantum computers, a threat most blockchains have not addressed yet. And the network is being wired for a future where artificial intelligence agents can make payments using XRP and RLUSD directly. Taken together, supporters argue this is an ecosystem maturing into real infrastructure, not just a coin waiting to pump. Now, this is a finance channel, not a hype channel, so let us talk honestly about the other side, because the risks here are real. The single biggest one is the disconnect we opened with. Despite all this progress, the XRP price has stayed weak, and there is a structural reason worth understanding. Of the roughly 300 banking partners in Ripple's network, only about 40% actually use the product that moves XRP through transactions. The other 60% use Ripple's messaging rails, which route payments without ever touching the token. In other words, Ripple, the company, can thrive while demand for XRP, the asset, stays flat. That gap is the core of the bear argument. On top of that, XRP tends to fall harder than the broader market during downturns. A large amount of its supply is still held in reserve and released over time, and it faces rising competition from stablecoins and from the private blockchains that big banks are building for themselves. None of this cancels the bull case, but any honest long-term thesis has to hold both sides at once. So what should you actually watch from here? A few clear catalysts. First, that Clarity Act vote, because turning legal clarity into permanent law could unlock the more cautious institutional money. Second, the growth of on-demand liquidity, the piece that converts Ripple's business success into real XRP demand. And third, whether exchange-traded fund inflows keep building over time. Those three threads, more than any short-term price swing, are what will tell you whether the long-term story is actually playing out. So let us bring it all together. The case for XRP succeeding over the long run does not rest on hype or a lucky rally. It rests on a specific bet that regulatory clarity, a genuine payments use case, deepening institutional rails, and a maturing ecosystem eventually converge into durable, real demand for the asset. Whether that bet pays off is genuinely uncertain, and the price disconnect proves the market has not made up its mind. But if you understand these pillars and these risks, you are now equipped to follow this story with far more clarity than the average investor chasing headlines. Quick and important reminder. Everything in this video is for educational purposes only. It is not financial advice, and it is not a recommendation to buy or sell anything. Crypto is highly volatile, and you should always do your own research and consider speaking with a licensed financial professional before making any decisions. If this breakdown gave you a clearer picture of XRP, do me a favor and hit that like button. It truly helps the channel grow. Subscribe to Pisano Finance for clear, no-hype breakdowns of the assets and stories shaping the future of finance. And I would love to hear from you in the comments. Do you think XRP's real-world use case will eventually pull the price with it? Or is the token disconnected from Ripple's success for good? Let me know where you stand. Thanks for watching, and I will see you in the next one.